Question 1. Topic: Commercial General Liability (CGL) insurance. A business owner is considering a commercial general liability (CGL) policy and wants to understand its exclusions. Which of the following situations would typically not be covered under a standard CGL policy? A. Damage caused to a third party's property during business operations. B. Bodily injury to an employee while performing their job duties. C. A lawsuit alleging false advertising filed by a competitor. D. Injury caused to a customer due to a defective product sold by the business. Answer: B. Bodily injury to an employee while performing their job duties. Explanation: Option A. Covered damage to a third party's property is a core part of CGL coverage under property damage liability. Option B. Not covered. Injuries to employees fall under workers' compensation insurance, not CGL policies. CGL excludes coverage for employee injuries as these are specifically addressed under other policies. Option C. Covered. False advertising lawsuits are included under personal and advertising injury coverage in most CGL policies. Option D. Covered. Injuries caused by defective products are covered under the product's completed operations liability of the CGL policy. Relevant rule: WISE Stat SS 100 2.3 mandates workers' compensation coverage for employee injuries, which are excluded from CGL policies. Question 2. Topic: Business interruption insurance. Scenario-based MS. Thompson owns a restaurant in Wisconsin that suffered severe damage due to a fire. She had business interruption insurance, which included extra expense coverage. The restaurant was closed for 3 months during repairs. She incurred additional expenses to rent a temporary kitchen to continue limited operations. Which of the following expenses would her business interruption insurance typically cover? A. The cost of repairing the damaged building. B. Lost income due to the temporary closure of the restaurant. C. The salaries of employees who were laid off due to the closure. D. The cost of purchasing new furniture to replace fire-damaged items. Answer: B. Lost income due to the temporary closure of the restaurant. Explanation: Option A. Not covered. Building repairs are covered under commercial property insurance, not business interruption insurance. Option B. Covered. Business interruption insurance is designed to replace lost income during the restoration period caused by a covered peril like fire. Option C. Not covered. Business interruption policies typically do not cover salaries of employees who are no longer employed unless there's specific payroll coverage. Option D. Not covered. Replacement of physical items is a property insurance matter, not part of business interruption insurance. Relevant guideline: ISO CP 030 Business Income Coverage Form outlines that lost income and extra expenses for business continuity during restoration are covered. Question 3. Topic: Cyber liability insurance. A manufacturing company in Wisconsin experienced a ransomware attack that encrypted critical business data. Which part of a cyber liability insurance policy would typically cover the costs of negotiating and paying the ransom? A. Network security liability coverage. B. Data breach notification coverage. C. Cyber extortion coverage. D. Business interruption coverage. Answer: C. Cyber extortion coverage. Explanation: Option A. Not covered. Network security liability covers lawsuits arising from security failures, not the direct cost of paying ransoms. Option B. Not covered. Data breach notification handles the costs associated with notifying affected parties about a data breach. Option C. Covered. Cyber extortion coverage specifically addresses costs related to threats such as ransom demands and negotiations. Option D. Not covered. Business interruption in cyber policies deals with income loss due to operational downtime, not ransom payments. Relevant guideline: NIST Cybersecurity Framework (CSF) emphasizes the importance of insurance for addressing ransomware incidents and ensuring operational recovery. Question 4. Commercial property insurance. A business purchases a commercial property insurance policy. After fire damages their inventory, they discover that some of the items were not listed in their business personal property coverage. What is the likely outcome regarding these items? A. The items will be fully covered under the standard policy terms. B. The items will not be covered unless they are specifically endorsed on the policy. C. The insurer will cover only 50% of the value of the items due to coinsurance. D. The insurer will deny the claim entirely, including all other items listed in the coverage. Answer: B. The items will not be covered unless they are specifically endorsed on the policy. Explanation: commercial property policies typically cover only the property explicitly listed in the declarations or scheduled under the policy. If the damaged items were not declared or endorsed, they fall outside the scope of coverage. Insurers require precise documentation to avoid disputes and ensure accurate premium assessments. Question 5. Workers' compensation insurance. An employee in Wisconsin suffers a temporary partial disability due to a workplace accident. Under the state workers' compensation laws, how are their benefits calculated? A. A percentage of the employee's average weekly wage, adjusted for permanent impairment ratings. B. The full amount of wages lost during the recovery period with no deductions. C. 2/3 of the difference between the employee's pre-injury wages and post-injury earning capacity. D. A fixed amount set by Wisconsin statute regardless of wages or injury severity. Answer: C. 2/3 of the difference between the employee's pre-injury wages and post-injury earning capacity. Explanation: Wisconsin workers' compensation laws provide temporary partial disability benefits calculated as 2/3 of the difference between pre-injury wages and the reduced earning capacity due to the disability. This compensates for lost income while encouraging partial work participation during recovery. Question 6. Commercial General Liability (CGL) insurance. A CGL policyholder is sued for damages caused by advertising practices. Which of the following claims is likely covered under the personal and advertising injury section of the policy? A. A competitor's claim of patent infringement. B. A customer's complaint about defective advertising materials. C. A lawsuit alleging copyright infringement in an advertisement. D. A claim of false representation in a verbal sales pitch. Answer: C. A lawsuit alleging copyright infringement in an advertisement. Explanation: the personal and advertising injury coverage in a CGL policy protects against specific liabilities, including copyright infringement, libel, and slander in advertisements. Patent infringement is typically excluded, and defective materials or verbal misrepresentations usually fall outside the scope of this coverage. Question 7. Scenario-based risk management and loss control. Maria owns a manufacturing plant in Wisconsin. During an audit, her insurance company advises implementing a sprinkler system to mitigate potential fire risks. However, Maria declines due to the cost. 3 months later, a fire occurs, causing significant losses. What impact might Maria's decision have on her insurance coverage? A. The insurer will deny the claim because Maria did not follow their recommendation. B. The claim will be covered, but the insurer might apply a penalty for inadequate risk mitigation. C. The insurer will pay the claim but may cancel or non-renew the policy afterward. D. The claim will be denied unless Maria can prove the recommendation was unreasonable. Answer: C. The insurer will pay the claim but may cancel or non-renew the policy afterward. Explanation: while insurers can suggest risk control measures, failure to implement them generally does not lead to claim denial unless explicitly required by the policy. However, insurers may reassess the risk profile and decide to cancel or non-renew the policy due to increased risk exposure. Question 8. Commercial umbrella insurance. What is the primary purpose of a commercial umbrella policy? A. To replace the primary liability coverage in all scenarios. B. To provide coverage for gaps in property insurance policies. C. To provide additional liability limits above the underlying policy. D. To cover all risks excluded by primary liability insurance. Answer: C. To provide additional liability limits above the underlying policy. Explanation: a commercial umbrella policy extends the liability limits of underlying policies, offering protection against catastrophic losses. It does not replace primary coverage or cover all exclusions, but it provides an essential buffer for businesses facing high liability claims. Question 9. Business Owners Policy (BOP). Which of the following businesses is most likely to qualify for a business owner's policy (BOP)? A. A multinational technology company with global operations. B. A small retail shop with less than $1 million in annual revenue. C. A large manufacturing firm with multiple locations. D. A financial services company managing high-value investments. Answer: B. A small retail shop with less than $1 million in annual revenue. Explanation: BOPs are designed for small to mid-sized businesses with straightforward risks. Eligibility criteria include size, revenue, and industry type. Large corporations or firms with complex risks typically require tailored commercial policies rather than a BOP. Question 10. Cyber liability insurance. Which of the following incidents would most likely be covered under a cyber liability insurance policy? A. Physical damage to servers caused by a natural disaster. B. A ransomware attack resulting in business interruption and extortion payments. C. A workplace injury claim involving ergonomic hazards. D. A claim for a contractual dispute between the insured and a vendor. Answer: B. A ransomware attack resulting in business interruption and extortion payments. Explanation: cyber liability insurance protects businesses against cyber threats such as ransomware, data breaches, and related interruptions. Physical damage and general liability risks are excluded, as are contractual disputes which are not cyber-specific. Question 11. Professional liability insurance. Which type of business is most likely to require a professional liability insurance policy? A. A retail clothing store. B. A financial advisor providing investment recommendations. C. A manufacturing company producing automotive parts. D. A small cafe serving food and beverages. Answer: B. A financial advisor providing investment recommendations. Explanation: professional liability insurance, also known as errors and omissions (EO) insurance, is essential for professionals who provide advice or specialized services. It protects against claims of negligence, misrepresentation, or failure to perform professional duties. Question 12. Auto insurance for business use. Which of the following vehicles is most likely to require a commercial auto policy instead of a personal auto policy? A. A family car occasionally used for commuting to work. B. A delivery van owned by a business and used daily for deliveries. C. A car rented for personal vacation purposes. D. A motorcycle used for personal recreation. Answer: B. A delivery van owned by a business and used daily for deliveries. Explanation: vehicles used primarily for business purposes, such as a delivery van, require commercial auto policy. These policies are tailored to the higher risks associated with business use, including frequent driving and carrying goods or passengers. Question 13. Inland marine insurance. What is the primary purpose of inland marine insurance? A. To cover damage to marine vessels operating on inland waterways. B. To provide liability coverage for business vehicles. C. To cover property in transit or movable property not confined to a fixed location. D. To insure businesses against flood damage. Answer: C. To cover property in transit or movable property not confined to a fixed location. Explanation: inland marine insurance is designed to protect against loss or damage to property in transit or at locations other than the insured's primary premises. It is commonly used for tools, equipment, and shipments. Question 14. Coinsurance in property policies. A commercial property policy has an 80% coinsurance clause. The property is insured for $400,000, but its replacement value is $600,000. If a $100,000 covered loss occurs, how much will the insurer pay? A. $100,000. B. $75,000. C. $80,000. D. $66,666. Answer: C. $80,000. Explanation: the coinsurance formula determines the payment amount insured. Required insurance ECLA equals Zeman $400,000 $480,000 x $100,000 equals $80,000. Question 15. Flood insurance. Under the National Flood Insurance Program (NFIP), which of the following is true? A. Flood insurance is mandatory for all homeowners in the United States. B. Flood insurance is included in standard homeowners insurance policies. C. Flood insurance is available only in communities participating in the NFIP. D. Flood insurance covers damage caused by sewer backups in all cases. Answer: C. Flood insurance is available only in communities participating in the NFIP. Explanation: the NFIP offers flood insurance to homeowners, renters, and businesses in participating communities that adopt and enforce floodplain management regulations. Sewer backups are covered only if directly caused by flooding. Question 16. Builder's risk insurance. When does coverage under builder's risk policy typically end? A. Upon the completion of construction or occupancy of the building. B. When the insured decides to terminate the policy. C. After the first year of the policy, regardless of construction progress. D. Upon the sale of the property to a new owner. Answer: A. Upon the completion of construction or occupancy of the building. Explanation: Builder's risk insurance provides coverage during the construction phase. It ends when the project is completed, occupied, or operational, as it is no longer considered under construction. Question 17. Liability insurance. Which of the following is typically excluded under commercial general liability (CGL or CA? Bodily injury caused to a third party on the insured's premises. B. Property damage to a neighboring building caused by the insured. C. Claims related to intentional harm caused by the insured. D. Legal defense costs for covered claims. Answer C. Claims related to intentional harm caused by the insured. Explanation: intentional acts or harm are excluded from liability policies as insurance is designed to cover accidental or unforeseen events. Coverage applies only to legitimate, unintended risks. Question 18. Business interruption insurance. Which of the following scenarios is most likely to be covered under business interruption insurance? A. Loss of income due to a competitor's new product launch. B. Revenue loss caused by a fire that temporarily shuts down operations. C. Decline in profits due to economic downturn. D. Reduction in income due to a temporary labor strike. Answer B. Revenue loss caused by a fire that temporarily shuts down operations. Explanation: business interruption insurance covers lost income resulting from events like fire or natural disasters that cause a suspension of operations. Economic conditions and labor strikes are generally excluded. Question 19. Crime insurance. What does a commercial crime insurance policy typically cover? A. Damages caused by a fire in the workplace. B. Employee injuries occurring during a robbery. C. Theft, fraud, or embezzlement by employees or outsiders. D. Legal claims related to business disputes with customers. Answer C. Theft, fraud, or embezzlement by employees or outsiders. Explanation: commercial crime insurance provides coverage for financial losses due to theft, fraud, or embezzlement. It protects businesses from internal and external crime-related risks. Question 20. Farm insurance. Which of the following is typically included in a farm insurance policy? A. Coverage for residential property only. B. Liability coverage for injuries caused by farming operations. C. Exclusive coverage for livestock losses. D. Automatic coverage for crop failure due to drought. Answer B. Liability coverage for injuries caused by farming operations. Explanation: farm insurance policies combine elements of homeowners, commercial property, and liability coverage. They include protection against injuries caused by farming operations, but may require separate endorsements for specific risks like crop failure. Question 21. Umbrella insurance. What is the primary function of a commercial umbrella insurance policy? A. To cover exclusions in a commercial auto policy. B. To provide excess liability coverage beyond underlying policy limits. C. To insure a business against losses from equipment breakdown. D. To replace general liability insurance entirely. Answer B. To provide excess liability coverage beyond underlying policy limits. Explanation: commercial umbrella insurance provides additional coverage when the limits of underlying liability policies, such as general liability or auto liability, are exhausted. It does not replace these policies. Question 22. Workers' compensation. Which of the following injuries would typically be covered under a workers' compensation policy? A. An employee breaks a leg while skiing during vacation. B. An employee is injured while driving a company vehicle for personal errands. C. An employee suffers a repetitive stress injury from job-related activities. D. An employee experiences illness from an unrelated pre-existing condition. Answer C. An employee suffers a repetitive stress injury from job-related activities. Explanation: workers' compensation covers injuries or illnesses that occur due to job-related tasks, including repetitive stress injuries. Non-work-related injuries or illnesses are excluded. Question 23. Named peril versus open peril. What is the key difference between a named peril policy and an open peril policy? A. Named peril policies cover all risks unless specifically excluded. B. Open peril policies list only the specific events that are covered. C. Named peril policies cover only listed risks, while open peril policies cover all risks unless excluded. D. Open peril policies include only liability coverage. Answer C. Named peril policies cover only listed risks, while open peril policies cover all risks unless excluded. Explanation: A named peril policy provides coverage only for risks explicitly listed in the policy. An open peril policy, by contrast, covers all risks except those explicitly excluded. Question 24. Key person insurance. What is the primary purpose of key person insurance for a business? A. To compensate an injured employee for workplace injuries. B. To protect against financial losses caused by the death or disability of a critical employee. C. To provide group health coverage for all employees. D. To insure property and equipment owned by the business. Answer B. To protect against financial losses caused by the death or disability of a critical employee. Explanation: Key person insurance protects a business from financial impacts due to the loss of an essential employee, such as a founder or executive, whose absence could significantly disrupt operations. Question 25. Equipment breakdown insurance. Which of the following is typically covered under equipment breakdown insurance? A. Physical damage to a building caused by a natural disaster. B. Losses due to employee theft. C. Damage to machinery caused by mechanical failure or electrical surges. D. General liability claims arising from defective products. Answer: C. Damage to machinery caused by mechanical failure or electrical surges. Explanation: Equipment breakdown insurance covers the cost of repairing or replacing machinery and equipment that fails due to mechanical or electrical issues. Question 26. Business Owners Policy (BOP). Which of the following is not typically included in a business owner's policy? BOP. A. Property insurance for buildings and contents. B. Business income insurance. C. Professional liability insurance. D. General liability insurance. Answer: C. Professional liability insurance. Explanation: a BOP combines property and general liability insurance along with business income coverage. Professional liability is usually not included and requires a separate policy. Question 27. Coinsurance penalty. A property is insured for $300,000 with an 80% coinsurance clause. Its replacement cost is $500,000 and a $200,000 loss occurs. How much will the insurer pay? A. $300,000. B. $200,000. C. $150,000. D. $120,000. Answer: C. $150,000. Explanation: Using the coinsurance formula, amount insured required insurance = $300,000 $400,000 x $200,000 equals $150,000. Question 20. Deductibles in insurance. How does a higher deductible typically affect an insurance policy? A. Increases the premium cost. B. Reduces the policyholder's financial responsibility for a claim. C. Decreases the premium cost. D. Removes the need for coinsurance. Answer: C. Decreases the premium cost. Explanation: a higher deductible reduces the insurer's risk by requiring the policyholder to pay more out of pocket for claims. This typically results in lower premiums. Question 29. Additional insured endorsement. Why might a business add another party as an additional insured on its general liability policy? A. To reduce the premium cost of the policy. B. To transfer all liability to the additional insured. C. To extend coverage to a party with a financial or operational interest in the business. D. To eliminate the need for separate liability policies. Answer: C. To extend coverage to a party with a financial or operational interest in the business. Explanation: Adding an additional insured provides liability protection for that party in connection with the named insured's business operations or premises. Question 30. Garage liability insurance. Which type of business is most likely to need garage liability insurance? A. A restaurant with dine-in and delivery services. B. An auto repair shop that services customer vehicles. C. A construction company with heavy equipment. D. A retail store selling electronics. Answer: B. An auto repair shop that services customer vehicles. Explanation: Garage liability insurance is tailored for businesses that work on, service, or store customer vehicles, providing coverage for liability related to these operations.